Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about a very, I would say, a new subject that I think that people have never thought about asking, but I think that people, they question this when they are filling out a credit card application. And that is, how much income should you put on an application? This is actually good to know because, I don't necessarily think about, what the answer would be because let's be honest. People lie on applications. Not only do I know that, you know that, and you better believe the banks know that, okay? And it's nothing new. Here's what you have to understand, is that your peers will snitch on you. I'm not talking about you, your friend that's next to you, and them calling the bank and saying, hey, XYZ, they said that they make 100,000, but really they make 20,000. You don't have to tell them that. You know why? Even though income is not on your credit report, they have a good guess of what your income is. Let's go into a couple of different things. Number one, their average age goes into like an average income. When I worked at Nissan for 6 years, I can tell you right off the bat that people that were anywhere that were old enough to be, I would say, 20 years old to about 30 years old. They're like that age range, 20 to 30 years old. The incomes will fluctuate, okay? So let's go 20 to 25. If they're 20 to 25, chances are they're probably going to be around $12 to $14 an hour. When they get around about 25 to 30, then they're going to get around about 14 to 17 dollars an hour. We're talking about average income. Now, this was, again, I was at Nissan, not high end, not low end, regardless of what you think. So, but either way, that was that income. So now you get around about 30, and then people are starting to make about maybe $20 an hour, 24, something like that. Income doesn't always go up as the ages go, depending on where people live. That's the cost of living, what type of degrees they have, what their address is. A lot of things factor into that. So are they looking at things without looking at things? Their age makes a difference, right? If you're curious, the average income that I've seen, again, we're looking at income all the time, looking at different races, looking at different ages, different backgrounds, different demographics of where they lived. The average income is going to be, for that age range, I would say a good 25 to 45 is going to be anywhere between about $30,000, $35,000, $40,000 a year. So we're talking before taxes. So we're looking at, that's about $15 an hour all the way up to about $20 an hour. And if you're looking at your income, you're like, man, that's about me. Now, some of you guys may be a little bit under that. Some of you all may be above that. Go ahead and pat yourself on the back. But at the same time, that's just the average. Does that mean that that's everybody? Not at all. My point is that that's just number one. Number two, people that start making a certain amount of money, their credit report starts to look like it. For example, after about 40 to 50,000, most people start having a different type of vehicle. They usually start financing a $20,000, $25,000, $30,000, $35,000 vehicle. They start thinking about home ownership, so then of course now you're looking at a possible mortgage on their credit report. You're going to see a couple of credit cards that's there. You may see some student loans depending on how old that person is. So there's a lot of factors that play a role into this. Number three, your income is not on your credit report, but where you work is. So, and a lot of people say, well, man, why is my employer on my credit report? Well, the last time you applied for credit, they had to know where you worked at, and they're going to put that on the credit report. So now let's go into what income is okay to put on the credit report. Number one, let's talk about a couple things. A lot of people don't know the difference between gross income and net income. This is an accountancy. By the way, I failed that. So we're going to keep this simple. Gross income is your income before taxes. Net income is the income that you take home after taxes. or hence what they deposit into your account every time it's time to get paid. Now, everyone's net income is going to be different because some people enroll in 401k, the benefits are different. Sometimes it's no benefits, sometimes it's health insurance. Everyone pays a different amount for health insurance. Some people have child support, some people have their wages garnished, some people have, their taxes are set up a little bit differently based on how many dependents they have. So everyone's net income is going to be different. That's why banks want to go gross income. It's crazy how they kind of go gross income, side note, because nobody takes that home, but that's completely separate. But they want you to they want you to put on the application gross income. Most of you know that. What people don't know is that if you get any income outside of that, that can be child support, that can be disability, that can be, anything that goes into your account on a consistent basis. For example, if you have a roommate, but only your name is on the lease, but if they give you money every single month, whether it be, cash or Chase Quick Pay or Cash App, whatever the case may be, that is considered income. Did you know that? You can actually put that on a credit card or, pretty much a credit card application. Now, you're applying for a mortgage or you're applying for a car, you cannot use that income because it's not income that you pay tax on. But a credit card, they use it in their algorithm to not only determine your eligibility, but also to determine your limit as well. That doesn't necessarily mean that the higher the income you put is going to always yield in a higher limit, because I had a client, she put $250,000 a year, knowing good and well her age bracket makes about $35,000 a year. Guess what her income was? About $35,000 a year. Sure enough, she got a $800 limit on I forgot what company it was, but my point is that the banks are not stupid. They know a $250,000 income person, their credit report is going to look a little bit different. Either things are going to be paid off or there's going to be a lot of debt. And not in a bad way, it's just a matter of, good debt, mortgages, cars, and things of that sort. So again, everyone's situation is going to be a little bit different. But now a lot of people don't know that. So now, and you can only do that if you're 21 years or older. If you're not sure, you can always look at the credit card terms before you apply. I think that's major that a lot of people do not do. That on every single credit card application, they must put on there the most frequently asked questions, and one of them are always going to be, what income should I put on the credit report? And you can count that income. If you get $3,000 a month, regular income, you get $1,000 child support, you put that on there. If someone gives you money, if someone pays your bills, you add up all of the money that they pay your bills on, that is income. You are deciding to use that money towards your bills. You are deciding to use the money that your roommate is giving you towards the rent. So again, that they consider that income, and that's only with credit cards, okay? Now, let's talk about lying on credit applications. People do it all the time. That does not mean that you should do it. You should not have to do it because, again, there are sometimes that banks have relationships with major corporations, and Walmart, McDonald's, Best Buy, you name it, corporations been out for a long time. They actually have access to systems that us as consumers don't have access to, and they can actually check to see what your income is. Now, again, I don't know, which companies do and which companies don't, but we saw this stuff all the time, when we was, in the car industry, and sometimes they would ask you for proof of income. I've seen companies like, Discover, Bank of America, Capital One ask for proof of income. They'll actually, send 2 check stubs just to verify your income. And it's not to say that you're lying. It's just that if they don't see an employer on your credit report, that could be a red flag. They say, well, man, when was the last time this person had a job? Obviously, it's not on their credit report. Or if the company that you work for now doesn't match the previous employer on your credit report. So just be wary of those types of things. And just so you know, I've seen people get high limit credit cards with a $25,000 a year, income gross before no taxes. I've seen people with $100,000 of income get $1,000 limit credit card. And so again, you can't finesse the system. It's not just the income itself. So a lot of times there's not necessarily a need to lie about your income, but people do it anyway. But at the same time, I'm not giving you advice on whether you should or should not. That's up to you. But here's the deal. Just don't be crazy stupid about this. Again, because they got access to more than you think that they do. Okay? Either way, if you like this video, like it. And of course, if you're looking to share it, share it. And as always, be sure to subscribe as we have nothing but great content on the way. Thank you guys so much. Have a great day.